Metro Vancouver home sales saw emerging signs of recovery in June, with sales registered on the MLS down 10% year over year, half the decline we saw in May. Let's take a closer look. June sales totaled just under 2,200. That's down 10% compared to June 2024 and 26% below the 10-year seasonal average. On the supply side, sellers listed 6,300 homes on the MLS, a 10% increase compared to June 2024 and 13% above the seasonal average. June ended with over 17,000 listings on the market, which is 44% above the seasonal average for the month. As home sales regain their footing, inventory levels aren't building as quickly as we've seen lately. If this momentum continues, we may soon see a shift towards a market with greater buyer demand. We can measure buyer demand using the sales to active listings ratio. This ratio measures the homes available for sale against the number of homes sold throughout the month to get an idea of supply and demand. Analysis of historical data suggests downward pressure on home prices occurs when this ratio dips below 12% for a sustained period. Home prices often experience upward pressure when it surpasses 20% over several months. The market overall stands in balanced conditions. June ended with this ratio at 13% for all homes. By property type, the ratio is 10% for detached homes, 17% for attached, and 14% for apartments. Looking at prices, the MLS HPI benchmark price for all housing types sits at $1,173,000. This is a 3% decrease from this time last year. By property type, the benchmark price of detached homes is $1,995,000, townhomes $1,104,000, and apartments $748,000. So what's next for the Metro Vancouver housing market? Most market segments remain in balanced market conditions, which has generally kept prices trending sideways since the start of the year. Couple that with a sizable inventory and mortgage rates down around 2% since last summer, buyers are enjoying some of the most favorable conditions seen in years. For further housing market information, go to the Market Watch section of our website.